Okay. Good afternoon, you beautiful human beings, guys. Welcome to Tuesday. This is the DVDM Markets Daily Dose. We got a ton to talk about and not too much time to do it. So I can just see in the comments there, Tumelo was asking, or Guwayne was asking, what withdrawal methods are the best to use? Personally, I utilize crypto. Super great. Once the crypto withdrawal is approved, you can pretty much send it to your bank account in 15 minutes. Super efficient, great to use. I think you need to make a crypto deposit first, and a lot of questions come down to which wallet works best for you. Personally, I use Luno. Super easy, super simple to set up, and you can send it pretty much anywhere. So just quickly answering the questions in the comments. So guys, let us know where in the world you're joining us from. We've had an amazing weekend, some good time. I'm super excited to get into this week, as well as announce this Saturday what we're going to be doing in terms of our special training event for Premium Plus clients only. But before that, we've got quite a bit to discuss, looking at the markets, looking at where we're at, a little bit of a forecast. So today's going to be a little bit of a deep dive in terms of the dollar, in terms of some commodities, indices, where are we going long term, and just to set the pace as we ease into the start of the new month, as well as wrap up August, right, which has been a pretty chaotic month in the markets, but it is not yet done, right? We still have NFP coming up this week. That's obviously starting off the month of September, but that is going to formally wrap up this month of August. So what I want to talk about is really quickly just jumping into some of the news, what the world's busy speaking about, and just making heads and or tails of the data that we're seeing just from a fundamental data perspective. So you're going to see a lot of articles running around like this, why September could be a lackluster, or at least a low performing month from a stocks and indices perspective. You dive a little bit deeper into this, you'll find out that over the last 40-50 years of stock market data, September is generally a month where most markets, specifically the S&P 500 as well as the NASDAQ, generally underperform in that month. Now, this is obviously taken over a large period of time, and all that data means, and the reason why it's important to look deeper into this, is that more than half of the times they look at September, there is a slight downtick on indices regarding the S&P 500 as well as the NASDAQ, right? So just because, you know, last year was a downturn doesn't necessarily mean this year is going to be, and we are on a different stage, we're on a different season, right? If we consider the pandemic and what we're, you know, coming out of with Powell interest rates announcements, etc., we are sitting in a completely different climate, but it's important not to ignore. Now, we're seeing a bunch of different things, essentially from the data perspective. One of the items that, you know, people are speaking about that will wrap up the month is, you know, this fresh economic data that we still have to get for this week. Now, what is that economic data? Super simple. For today, we've got some of that CB consumer confidence coming out at 4 o'clock on the dollar, as well as JOLTS job openings also at 4 o'clock on the dollar. Now, for the balance of the week, obviously you guys know we have the NFP non-farm payrolls that's going to be coming out on Friday, with some other data that's going to be out on Tuesday, but that's going to basically dominate the market for the remainder, or at least the wrap up of this month. Now, again, you guys know the importance of NFP non-farm employment data. We will be trading this live as part of Premium Plus. Again, Fridays are generally quite tumultuous. Again, if you're starting off your trading journey, it is far better to learn about what's happening in these events than to risk a smaller account. This really is not for smaller accounts, and I just want to stress that. Specifically, some of these bigger fundamental data events, these are not for smaller accounts. So if you want to tune in, you want to play some demo trades, it's definitely the way to go. And I've kind of answered the next question that I wanted to pose. I get that question a lot. People saying, hey, but I've got a $100, $200 account. What do I do? Guys, have yourself a demo account on the side, right? So when I'm saying, listen, there's going to be a tricky trading situation. Place trades on a demo, and that will give you an evaluation of how would you have come out should you have traded this live, and build up your confidence, right? Have a look at your stop loss, your TP, look at your risk management, and it's a great way to practice in real live time and deal with a situation, how we analyze, how we look at things, and how do you interpret that, and what do you choose to do, right? So you don't want to participate in a live account in some of these bigger events. Pop onto your demo accounts, right? Practice risk management in your mind. Pretend, even if it's a $5,000 demo account, pretend it's a $500 live account, and utilize the same risk management. So just a little bit of a side note from that perspective. Looking at the S&P 500 for yesterday, we can see we are looking at largely green. However, this is not green by a large percentage. We're speaking in most cases sub 1% gains across the board, but it's still green nevertheless, right? So stock market overall for yesterday, S&P 500 ending off slightly more positive. Now, the thing I really want to be speaking about today is I want to jump into the markets, because there's quite a few things I've pointed out, or I want to point out, specifically looking at the dollar long term, as well as then moving into some currencies, commodities, and so forth. So what I want to start off with this afternoon is we're going to start off with this dollar index. We're taking a really zoomed out approach here, because I just want to talk about where the dollar's been, where it is now, and what this all means for us as traders, right? So I'm just going to move up this. Let me see if I can adjust that little dude over there. Just want to move our little chat box. I like to leave it up on screen, so I'm just going to leave it, but I'm just going to move it up over there. I hope that's not a problem. If it is a problem for anybody, drop in the comments, and the beautiful Miss Marshbot will let me know. All right, so we are looking at the dollar index here. This is a weekly time frame, obviously massively zoomed out, but I just want to draw your attention to the fact of where we are right now from a price perspective. We have attempted to peak out on the dollar index 2017, start of 2017, the start of 2020, just about where that little spike through there, as well as 2022 in May, as well as kind of where we are right now. Now, the closest spike to where we are right now, and I just want to point out that at this 104 plus minus range, in the last, let's say 8 years, the dollar index only managed to make it through this level solidly once, right? And that is going to be part and parcel of these interest rate hikes that pretty much boosted the dollar massively to the top side. With that being said, if you look at where we are now, we've made an attempt in the past to get through here. Technically, we did not make it through here. We've made a secondary attempt, and that was at the end of May as we started June. And now we are at that third attempt where we are right now. Now, again, I have a massive sort of technical bias. I'm going to drop down to a 4-hour time frame just to show you this. I've got a massive technical bias off of a dollar short right now. In my opinion, I was under the impression and firmly looking at the smaller price action in terms of this last bull move we had in July, that short might have come to fruition slightly earlier. I was also looking forward and looking towards a short along this region. We did not get that. This is going to be the highest region where we are currently now, and specifically over the course of this next week, where if the dollar is going to fail this historic level, right? We've seen in the past it's temporarily made it through it, but ultimately from a failure perspective, we do see large amounts of volume and just liquidity failures at these points. If that's going to happen, this is going to be the zone that it happens. Now, there's a couple other things I want to point out that will make sense as to why it is that I'm saying this. And even if this dollar index, let's say for you, it's a little bit complicated, or you don't necessarily trust it, whatever the case may be, you can have many reasons as to why you don't necessarily use the dollar index for your trading setups. But I'm going to show you a couple other examples, and I want to show you how this lines up. So first and foremost, I'm going to show you, let's have a look here. I wanted to show you guys, I believe it was USD CHF. Okay, so in front of us, we have USD CHF 1-day time frame. And I want to show you that we are in this channel, right? We're in this descending channel formation. And if you look at where we are right now in time, in relation to where we've been in the past in this channel, you can see it's not a far stretch to, just from a pure price action perspective, anticipate some sort of rejection along this level, right? So what does this mean? For USD CHF to essentially sell off, we mean that $1 is going to buy less and less Swiss franc, meaning the dollar is going to become weaker, right? Or the Swiss franc is going to become more expensive. So remember this part, right? So USD CHF from a pure price action perspective, giving us some good data that there's a high likelihood we could see a rejection off this level. which is more than likely going to be a 61.8, let's say, off that level over there, right? So 61.8, potentially a push to the 78.6 is possible. But just for the back of your mind, I want you to see here from a price action perspective, there's an anticipation for the dollar to get weaker. Let's switch over to Euro USD, right? Now, when we look at Euro USD, and we spoke about this, I think towards the end of last week, Euro USD has made that little push down. There's a 1 day time frame, right? Again, a nice, clean, beautiful channel. We've been waiting for us to build out for pretty much quite a few weeks, right? I believe it was Tumelo in his group. I did also point out that Euro USD topside, and I think if you guys remember, a little while back into July, we looked at the Euro USD topside sell, which we actually issued as a signal. We would not follow and give updates on that, but ultimately Euro USD moved down for a massive 400 pips. In the same way, we've been waiting for that support region to be met, which we have, right? Support regions pushed down. I did warn you guys, we could make a little temporary push to 78.6 or 78.6, and we did. That's completed. But now for Euro USD to go topside, what does it mean, right? So if 1 euro is buying more and more dollars, what does that mean? Either, right, the euro is essentially gaining in value, or the dollar needs to weaken in value for 1 euro to buy more and more dollars. Now, if you remember, we spoke about, just a few seconds ago about USD CHF. Again, the common denominator between both of these symbols, both moving in clear price action, would be the common denominator of the dollar losing value across the board, right? So even if the dollar index is a bit too complicated for you, there's signs everywhere out there that you can go and tie up. And what we want to do specifically as price action traders, ignoring the fundamentals, ignoring some of those other items out there, purely from a technical perspective, is you're looking for the stars to align in more than one way, and often they do. I was speaking with the leadership group over the course of last week, and I might have mentioned it in one of the previous shows, but everything that is ever going to happen into the future has already happened in the past, right? Some of the most famous investors in the world have made most of their money not by rubbing a silver ball, not by, whatever, toying outside, but simply studying the past recessions, past moves, and utilizing that to look for common denominators to show signs that this will repeat itself in the future, which it often does. So in this particular case, we're looking to align the stars. So I'm looking at a Euro USD long, be part of Premium Plus. I will be issuing this trade once it's ready. And what I'm looking to do is not to try and guess the bottom side of the market, because again, we do believe that's a 78.6, but anything can happen between now and NFP on Friday. Once NFP is completed, and should we see a result that provides a weaker dollar data perspective for NFP, then it's clearly written in the stars, and we will start looking for Euro USD longs, as well as let's have a look here. I believe it was USD CAD. No, it's not USD CAD. I really do need to arrange my charts. I sometimes have way too many charts. We will then also have a look at that USD CHF short positions, right? Just so you guys are well aware. So again, as we're looking at the dollar index, I'm looking for a failure zone in this 104 region, 104 range, 104.4, 104.7, doesn't really matter, but ultimately looking for some sort of failure in this range, because it means then long term, once we get that rejection, we have a weaker dollar throughout the balance of the year. And that could roll out over a quarter, it could roll over 2 quarters, and as we've seen, can potentially run over a couple of years before we receive some other high. Now remember, what is the other catalyst we've been speaking about over the last couple of weeks? The other major catalyst that could essentially lend itself to the dollar weakness is if the Federal Reserve and Powell announce a pause on interest rates at the next meeting and give a hint as to when interest rates will start to decline, right? To obviously curb inflation. We've been through this in quite a bit of detail, but that'll be the catalyst to a weaker dollar. The dollar has been thriving off the higher interest rates that have been imposed to obviously curb inflation. But if Powell and the Fed indicate that they are going to pause and or potentially taper off on those hikes, interest rate reductions, this would obviously take a little bit of the air out of the dollar's surging balloon towards the top side. So that is a big catalyst we will definitely look out for. But let's move on into indices, because I know that's where a lot of action happens. I know it's where a lot of people are spending their time, as well as having a look at trading. So in front of me, we have US 30. Pretty much a favorite for everybody outside of those who obviously love US 100, and most of the people who love US 100 also love US 30, so they are interchangeable. For our time frame, as I've explained in the past, US 30 is in this major rally position, right? People are speaking about, markets are pausing, etc. what they're drawing from is this pullback from August, right? Which again, we spoke about in the beginning of August as a descending triangle and a potential breakout from the top side. And ultimately it failed and moved down well over 10,000 pips to the downside. But that failure is long a diagonal support, and generally this is a bull market structure. This is a rising price action structure. Now, what has US30 done? US30 has failed to a known level, and if I drop down to an hour, you'll see how clear that level is. 1, 2, 3, 4. False move towards the downside, maybe a little bit of a liquidity grab or creating liquidity, then going back into market structure, now sitting in this range. Now, because of this, because of the fact that we've completed this downside move, this downside grab, it would have been too easy from a price action perspective for traders to spot this long move. Often I tell people when it's too easy, expect not some form of manipulation, right? Not some form of they're trying to take your money. You must remember, for markets to move, there needs to be liquidity in order for it to be able to move. And mere retail traders are not enough to make a market move. Big banks need to get into the same move. Now think about this. If a big bank wants to liquidate, right, their sell side position and they want to enter into buyers with you, what do they need to do? They need to close that sell side position. They need to reverse their order. They're doing hundreds of thousands of contracts at a time, and this will cause these types of market dips, right? So when it's too obvious, don't shout manipulation, don't shout someone's out to get you. You have to learn these patterns and when to not get in and when to get in. But ultimately, this move is being completed, liquidity is being created, let's refer to that as a better term, and now we're in this new state. Now have a look at where we're currently sitting. We're currently sitting at the moment on US30, trading at $34,539 to a single share or position on the US30, otherwise known as the Dow Jones. Now, because of where we're currently sitting, again, I would really like to see a little bit of a further push towards the downside to now grab a nice entry around about that 34,400 mark, as deep in as we can. However, should we receive, right, a negative NFP, negative meaning weak for the dollar, this would obviously send indices across the board surging towards that top side. So even if we're still sitting above support here, and again, provided we are sitting above support and we get that negative NFP data, that is what I'll be looking for a long side play. Now, it's also very possible, right? Looking at this afternoon, we have the New York Stock Exchange opening up in the next couple of minutes. There is some price action from a diagonal perspective that does offer some level of support for the US30 as we currently speak. So there is a rising market structure at the moment. We have come back to support. We're technically still making higher lows, and this is still technically in bull formation or bull stage. So a little bit of a rally on the New York Stock Exchange open for this afternoon, and something signaling, I would say, we could utilize a little bit of a tighter market price action structure here. Something signaling a little bit more of an aggressive move or a little bit of a larger move like that may prove as a potential entry point to getting long. I just want to point out, we do want to clear and just make sure we are technically above the early morning market levels, right? So when we speak about early morning market levels, we're talking about the high from the previous day and the starting points of the market's early mornings. There's going to be a zone that price needs to sweep in order to obviously continue in a new direction. So for those of you trading US30 and you're looking for New York Stock Exchange edge, then again, a break to that top side would prove as an edge here. From a short perspective, I'm not looking at shorting the US30 down to that support region. Again, just because of the fact that in that space, that's going to be a mere scalp, might be a couple minutes, a couple hours. But again, I'm looking in the season specifically for September into getting into longer swing trades. Now, if you guys were part and parcel of our gold buy, these we took on bigger accounts, largely more from an investment perspective than anything else. If I go over to the gold setup, you guys will remember last week, Monday, we made a video looking at gold as a potential buy breakout at that point, right? We got the initial move. Gold then made a secondary pull down, and I issued out that buy order 1889, 18890 to 1889 plus minus somewhere about there. And if you in that buy move, you wouldn't have had to worry about any of these pullbacks whatsoever, because again, gold is technically in a price action breakout, has made all the moves it needs to, and we're looking at that long-term move towards that 1950, even 1980 mark, long term. But what is in our cards for today? Let's say you're not in a trade like this. What do you do? How do you handle it? How do we go about this? Well, pretty simple, right? We're leaving that original market structure we used to get the buy breakout. That's that diagonal over there. This is currently a 1 hour time frame. And we can clearly see through utilizing the same fib levels we've used before. Now, when I speak about the same fib levels, what am I referring to? I'm referring to those fib levels, the impulse that gold had towards the downside. We are measuring the next levels of resistance and or support. Now, what this does give us is a very clean area to look at next levels, next goals, to either add positions, take profits, or reduce risk, right? These are going to be clear zones for us to target on the way up and on the way down. What I'm looking at for gold, right, to add maybe entries on a smaller accounts, more from a scalping perspective, or even just add entries to the bigger or larger investment type positions, would be trying to grab a trade in that 1907 mark, so $1,907 to an ounce of gold. This would be a great grab from a trade perspective, right? So 1907, 1908, anything further than that, I believe the absolute deepest I'll look at again would be some sort of correlation along the original entry point we had, maybe a 1903, 1902. That would be the absolute deepest I would try and grab a buy order. Again, timing of where that order is entered into and where we are from a data perspective is going to be super important, right? If we just before NFP, I would rather hold on to my larger position down below. But I do and am aware that there are a lot of Premium Plus students that are still holding some buys on gold. And there's quite a few of you out there that are still holding on some really good buys, and super proud of you guys for doing that. But other than that, those will be new entry points I'll look at, but these I will enter and or send through to Premium Plus. So if I look at that market, it gets there and I'm happy with how the markets are pushing into that level. And I think this is maybe something else maybe we can just touch on before we wrap up for this afternoon session, is that when we speak about markets getting to a level, let's say you're part of the free group and you see me talk about 1907, let's say as an example. You're not part of Premium Plus, you see price shoot down to 1907, you enter and you get stopped out, right? When we talk about markets getting to that level, we're also looking at how markets react when arriving at that level. If markets are super aggressive and moving down with a ton of force, there's a ton of volume, we're looking at different types of indicators, we're looking at other correlations on other pairs to see, is the dollar the common denominator driving price at that particular point, or is there an external factor? There's probably about 5 or 6 things we look at when price is moving aggressively towards a zone to anticipate a price or market being hit and reversing, or whether this is too aggressive and price will push through. So when you're watching as part of free and you see us speaking about a zone, that is why I send the order as and when I take it into Premium Plus, and not just say, hey guys, if you're part of Premium Plus, enter a trade at that level, right? Again, it's not financial advice in any way, shape or form. Again, this is just purely from an educational perspective, but again, that's why we say I'll send the trade through as and when it reaches that level, provided I see the things that I like the conditions are met in order to enter. And I think that's super important, because I think a lot of people just mark a zone, they have an alert go off and they enter at that zone. And that's again the power of being part of Premium Plus, that if you see me send a trade, I'm monitoring it, I'm in it with you, you're not alone on that position whatsoever. So quite a few things happening in the market today. Again, there's going to be some good long Forex opportunities. We are looking at some currency opportunities, as I said, Euro USD, as well as I think it is USD CHF. Then we do have some indice opportunities that will materialize, as well as some others. Looking at US 100, I'm not too interested right now, right? We've obviously had the big tech do some of their releases. US 100 is still on a little bit of a high from those Nvidia releases, all this AI data coming out, etc. And so I am expecting US 100 to go through a little bit of a corrective phase. This is a 4-hour time frame, but again, technically broken out of that little bit of a let's call it the bear August, and not performing too badly for August overall. I don't think the article is going to be 100% correct in saying that September is going to be another bad month based on past data, but I'm also expecting that all of the hype that we've seen through technology, what goes up has to come down at some point. I'm going to start looking a little bit more into US 30, again, just purely from a strategic price action perspective, how robust it is, and what we could potentially see long term. So again, just a slight recap there for anybody who may have missed it. We are looking at any sort of potentials here for a long. On the start of this US session, I can see US30 is making a little bit of a pull down off of that mark, that potential zone we're looking at as a long, and should pull down, no issues. But what I am looking for is a New York Stock Exchange open break. Should she break there, I want to try and get in a position as it currently is. In addition to that, there's a few other things we're looking for, but I will send trades as and when I take them, and if I see something materialize, I will send that through. We are spending a little bit of time looking at USD ZAR. There's obviously quite a bit happening there. We just want to further analyze. BRICS is obviously having a pretty big complication to that. We're seeing a lot of countries, and again, this is a complicated subject. We're going to do a whole separate coverage just on BRICS, unpacking it for what it means for South Africa, what it means for you, what it means for us from a business perspective as well as an international trade perspective. But the complications are immense, right? Some of our biggest investors are not sitting in the BRICS sort of conglomerates, if you will, and so we've got a lot of dollars, a lot of euro tied up in South Africa, and BRICS has a ton of complications. That'll be a whole separate feature. However, for the Saturday, please remember, if you're part of Premium Plus and you have an active subscription for September, right, we are having that training on Saturday. We're going to go through the Golden Nugget. The Golden Nugget is evolving as we speak. However, I've identified an amazing way for you to take advantage of both the Golden Nugget move as well as the reversal and or continuation. And I've put together some very, very specific tools that you can use to identify this. These are essentially indicators you can use to understand and you know, how much strength is involved and would we potentially get a reversal. I found something pretty amazing. I've not shared this with the leaders group. I've not shared this with anybody. You, as part of Premium Plus, will be getting this first on Saturday. In addition to that, I'm going to be teaching you guys about my exponential money multiplier strategy. And this is how you utilize running profits to open up new trades. And you're not utilizing account balance or equity, essentially using the market's money to make money, right? I'm going to be teaching this in great detail. I'm going to be giving you spreadsheets, guidelines on how to utilize the strategy to take an account from any size to a much, much larger account, and how to deal with and manage the psychology of money later on, how to just treat it like a number, that you don't start making trades thinking about what could that have bought, what could that have purchased, etc. So we're going to be covering this all on Saturday. This is going to be going down at lunchtime on Saturday. So 12 o'clock Saturday afternoon. There's a bunch of things that we have happening on Saturday, but I'm making this effort to make sure that I spend some time with you, answer your questions, and we dive deep on not only the Golden Nugget, but some other things. Depending how much time we have, we may even go even further. We may teach additional things. Please remember, if you're joining us on Saturday, you're part of Premium Plus. We will be sending out a form on Thursday or Friday for you to RSVP to get the link to this session. Please make sure you've watched the Academy first, right? The Academy is down in the link below. There's a ton of value in there. If you're brand new to DVDM market, brand new to Premium Plus, the Academy is a prerequisite. It's going to teach you about money, teach you about money management, risk. I deal with so many traders that are part and parcel of what we do for months, sometimes even years. And I found out 2 years down the line that they haven't even watched the Academy. They don't understand risk management. They don't understand pips. They don't understand psychology, etc. And this fixes a lot of their problems that even as advanced traders suffer with. So do yourself a favor, go in. It's free to everybody in the world. Go through, spend your time, educate yourself, empower yourself. That's what it's all about. So for this afternoon, we're looking at the New York Stock Exchange Open, what that gives us. That is happening at 3:30. Then again, directly at 4 o'clock, 30 minutes later, we do receive that CB consumer confidence, as well as some of those initial, let me just double check, that initial JOLT job opening data point, right? Those items together are essentially going to set the tone for the balance of the day on the fundamental front. So we are going to be looking at that with quite a bit of detail. If you're part of Premium Plus, you know where it's at. If you're not part of Premium Plus, what are you doing? Close your laptop, throw your laptop away, close MT4, delete MT4. You're not part of Premium Plus, you're not going to make it in space, right? Join for less than $1 a day. There's a ton of value. We don't trade every single day of the month, but when we trade, we make it special, make it big. Over and above making some money, you learn something along the way and you grow as a trader. The value proposition is overwhelming. So outside that, guys, I'll see you guys in the group. If you see me send something, that means it is a trade that I'm taking, and we will monitor and follow up as that trade develops. We are gearing up for NFP on Friday. There's a few different things we're going to be using. And for NFP on Friday, I'm putting something together very, very special for for those of you who are part of Premium Plus, right? And I'm going to tell you a little bit about it. I've been wanting to keep it for a secret for Thursday afternoon, but I believe there's going to be a lot of people who don't know about this and or potentially miss out. So what we're doing for Friday is we're putting together a little bit of code that is essentially going to help you to trade NFP, right? And what this is going to do specifically in NFP situations, it's very hard to open, close trades very quickly. So what we're doing is writing a little bit of software that's going to allow you to set your risk management in place so that you say, right, I only want to use 2% of my account, 3% of my accounts. These are the trade sizes I want to enter. These are the stop losses I want to enter in. And when NFP starts to move, it'll do a couple things. We can either set up pending orders with one click, we can open up trades with one click, and we can close all trades with one click, meaning one click does everything, right? It's software I've built, I've been testing in the past to see how efficient is it. And one thing I found about these high impact news events is our ability to open and close trades is a problem, right? Imagine you've got 5-6 positions and you want to close all 5 positions. There's 5 or 6 seconds between you closing all those positions, or even opening positions, setting up your stop loss, writing in your TP. In most cases, people just open the trade and then set the thing afterwards. But what if it was wrong, right? That market could take you out in that space of time. So those of you that are part of Premium Plus, got that special software. It's going to be linked to your MetaTrader account. I will give you guys steps on how to set that up prior to NFP. So stand by. That's pretty exciting, and it's a free gift from me to you to utilize just for being a part of Premium Plus. And you can use it in any form of trading, right? Once you've got used to it, you can use it to open up your trades, set risk management, set everything. You want to close all your positions, one click. You want to set pending orders north or south of your position, one click, done and dusted. So anyway, that'll be launching on Thursday. It'll be free for every single one of you, part of Premium Plus, right? Your subscription is expired, or you're part of the group that got in for free some time ago. Please don't inbox me and say, Dane, where's my things? Guys, if you've been in the groups for free from June, you've been sitting, benefiting, learning, trading, whatever, please do yourself a favor. I'm telling you up front, if you ask me for something, you've been here for free forever, you may get 1 or 2 words that aren't exactly Christian. So yeah, let's just anticipate that's going to come. Pay your fee, be done with it, be a proud community and part and parcel of everybody else. That is what it is all about. Outside of that, guys, listen, much love, trade safe, be safe. Let's see what happens in the New York Stock Exchange Open, and let's see what data we get from a fundamental data perspective. And if that dollar crashes and starts to crash, best believe we're going to be on the winning side of those withdrawals, without a doubt. So until we speak a little bit later, much love, chat later, and goodbye.